Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap, this holiday shortened week where I think a lot of people fell asleep. Market gapped up, which a lot of people weren't expecting because of the weak negative close we had last week, but overseas kind of took it in stride. So futures are up about 10, 15 handles. And then I would say by the first 60 minutes of the day, the market faded. And then I think in the last 20 minutes, everything kind of floated back to highs. And that's what happens during the holiday shortened week when volume is low and there's not a lot of people around. People could push the market around. So you want to make sure that you either play things very tight or you give them some room. Because if you look at the chart of the spiders, we talked about defined support this morning, and basically that's what wound up holding. Okay, does it mean we're in a raring bull market? No. Does it mean if you bought today and said, I'm going to give it to, last week's lows, you did just fine. Here is the upper end of support. Here is your lower end. Maybe tomorrow we'll see if potentially this lower pivot could fill the open gap from Friday. So for now, the floor kind of held. Was it a false sense of security based on the fact that we didn't break down? And then maybe later this week we do, or was it stabilization before a little bit of a move back up? You know what? We shall see. If you look real quickly at the Qs, we'll see what happened here. Qs also, technology, wound up holding a lower level support. So I guess the same way you couldn't break above upper level resistance. Now you're here in this lower area, and the question is, can it, continue to hold the floor that's, being built, and potentially will it, get into this gap? But then look at all these moving averages right there. It's just, not a very compelling trade. It's just little tactical cash flow. Let's look at one more sector. Let's look at the Russell. The Russell also, not doing a heck of a lot. It's actually really weak. Here's your high. Here's another little lower high, another pivot lower high. And, at least I guess this didn't make it back to here. So there's, all these things are below the moving averages. So that's probably the problem that we have here, is that technically, most of the sectors, most of the stocks, are all below their 8-day, their 21-day, their 50-day, most below the 200-day. But then you have those select few names that are still hanging around, but the patterns aren't great, and maybe, could give you a push into the end of the year. We talked about this morning, can the SPX close around 2050, which, is not a heck of a move, but it is, I guess, something considering, from the lower end of the range back into the middle end, okay, that's a trade. Better to be long that versus short that if that's the case. And again, this bigger range is still intact. The question is, probably doesn't get resolved until 2016. So, you talk about those FANG stocks real quickly. Let's take a quick look at Facebook. Still, not a heck of a lot. It, at the end of the day, came back like most things. If you want to draw your chart here on Facebook, still above big support, just not a heck of a lot of momentum. Held the moving averages. It's still in the game, but there's just no continuity. And that's the problem with the market, is the lack of continuity. Google, also, if you look at it, GOOGL, it, hung around, but, there's not much to get excited about here. Yes, it's above the lower end of the range, coming into the moving averages, not ready for a breakout trade, kind of just floating around. And if you look at the range in this, you could have got hurt long or short Google. Google basically, opened up this morning. Okay, if you look back at the open here, and then if you didn't get out of the way, you probably got stopped out of Google right here. Okay, and then it trended down, reversed, came all the way to the lows before popping. What is that? That's about $7 into the end of the day, which was basically a coin flip because it looked pretty weak all day, and then boom, that happens. So it goes to show you that if you buy too early, you can get stopped out. And if you maybe added to your shorts thinking that Google was going to fall apart on this 5-minute chart, you probably got squeezed up. Let's go to Apple. Apple, some guys were talking about this little move into the close. I'm thinking that sentiment is so horrendous around Apple that maybe it's time for a little bit of a bounce. And, again, from where it is, I guess it could try. Is it broken? Yes. Was your time to sell it probably closer to when this wedge broke to the downside around 116? So maybe you do get a rally, but again, doesn't look like you could be expecting too much. But what are we looking for these days? From 106, 107 back to 110, that still would be money. if that's what happens, just to rally back into resistance, even if in macros 2016 you're looking at a bigger, more pronounced, head and shoulders top pattern that a lot of guys are clamoring about, with the left shoulder, the head, your right shoulder, and they say that this is the break of the neckline that might get a retest before going lower. But until that happens, you got to trade what's in front of you. Today oil didn't fall apart, so I guess that wasn't a headwind. Some guys were still in gold. You look at gold real quickly. Some are trying to figure out whether or not they could play it long here at this point. Buying a 3-day move in gold has not been successful. You just rallied back up to resistance. I guess if the GLDs want to be any good, maybe it holds, this 102 area. If you want to look at this lower pivot, it's still also like everything else. It's below every moving average, not trending up. But for a trade, there was something there. So now I guess if it were to go sideways and get above this, perhaps there's a little bit of a move in the GLDs to fill this gap into here. Lastly, Bob I was looking at this morning didn't really do anything. Still hanging around. I'd say still sort of constructive. So for me, I bought some January calls. You'll see it on my disclosure. Figured perhaps if they do come after the market, I do see a pattern here that I thought if it were to get above this, it would act better. It's above the lower end of the range, held higher right here, and now it's still held a bit higher there. So for me, BABA looks better than it's done in a while. So if any momentum comes back, the Shanghai was at 3-week highs. Maybe this continues to the upside. It's actually above some of the moving averages. And then some are asking me, why did I get in WYNN? You know what? I'm just thinking that, Steve WYNN bought 1 million shares or so. It's been in this crazy downtrend. I didn't buy the stock because it's stuck in this downtrend, but at some point, perhaps, if it wants to test it and clear this area, I might not be in there for some kind of news. So I bought some January 22nd 70 calls just in case, it wants to retrace, considering the stock was well above 200 and, figured maybe there's a January effect type move there. So in conclusion, the market was very, just lethargic today. You could have made a little bit of money, I guess, if you shorted versus the 30-60-minute high, and then if you flipped your coin at 315 and thought perhaps that they weren't going to break the market down, bought versus the lows of the day, and closed your eyes, you were surprised in the end of the day. And I guess that's the way you have to trade these days. You have to flip a coin, close your eyes, and not watch the screen. Otherwise, it could, definitely wear you out and get you a little bit frustrated. So if that's you, take a break. Christmas is coming. New Year's is around the corner. You're not going to make or break your year in the week of holiday trading. But if you want to stick with a few things, use some levels, not trade too much size, perhaps there'll be some calculated trades that we'll go over as the week progresses. Have a great night. I'll see you tomorrow morning.